Good morning, good morning. How's everybody doing this morning? Can you guys hear me okay? Just want to make sure you guys can hear me and everything is good. You guys can see my screen. Just let me know. Looks like everything is good. Alright. So, what do we have here in the markets? We can see clearly that the stock market is uptrending. Alright? There's no reason to think that there's going to be any move to the downside as things are right now. Okay? There's no reason to believe that the market's going to go down. Good morning, good morning. So we have the S&P up. When we look at the time frames, what do we see? Okay, we see that we have the monthly chart is up, the weekly chart is up, the daily chart is up, and right now we have the 4-hour chart is not up. Okay, so that means trading decisions cannot be made based on the 4-hour time frame. So areas of demand that were created by the banks are being removed, which leaves us to focus on the daily chart. Alright, so the daily chart is what we're going to be focusing on here. And so if we take a look and zoom in on this daily chart, what we can see is this. The chart was moving to the upside. We had institutional demand here. Price came down, just fell short of it, and now peaked above the previous high here, made a new high, and now is retracing downwards. Okay, so we still have this area of demand that hasn't been contacted yet by the banks. So the last area of selling, or buying I should say, by the banks is this area right here. Okay, this is the spot where we suspect if price was to drop, we'd see a reversal from. Okay, now let's take a look at what we have with the other markets, because they're in similar situations. So the Dow Jones, it's also uptrending, but let's take a look at what we have here. Dow Jones monthly is uptrending, weekly is uptrending. The daily chart is in a different scenario. Okay, it's showing a little bit more weakness than all the other, than the S&P. This one is not holding a trend any longer on this chart. Okay, so what we would need to be focusing on is the weekly time frame. And when we look at the weekly time frame, what can we see? We see that price is in an uptrend, and the latest area of demand is right here. Okay, this is the area where the banks were buying, the last area where the banks were buying. So if price drops down here, we have buying, and then we can see a rally from here. So what does this indicate to us? Well, this indicates to us that if price wants to get weak, we can have a drop from here to down here. Whereas on the S&P, the drop is not as significant as the one that, as this drop that would have to take place here. Okay? So now let's go over to the Nasdaq and see what's going on here. So this situation is a slightly different. So let me point out what I'm seeing here. So on this chart, we have upward trend on the monthly, upward trend on the weekly, upward trend on the daily. But as you can see, price has already retraced down to the area of demand on the daily chart and responded to it right here. Okay, price came down, made a move higher, and actually closed above the previous high. So that's strong. The market is strong here, but it's already contacted that demand. On the 4-hour chart, what we typically would want to see is price retrace into areas of demand on the 4-hour chart for a continued move higher. All right, so that hasn't happened. On this chart, this 4-hour chart is now broken through. Okay, So that leads me to suspect that if price was to drop, there's a possibility that it could drop to this area and drop even further. Okay, if it was to drop, that is. So we'll be watching that and monitoring that as time progresses. But the key points to mention here is that there's definitely the chance for the markets to drop. Okay, it does exist. Okay, and we've seen some profit taking on some of the stocks that we follow, and we'll take a look at that. I mean, look at Apple. So Apple's very strong. It's moved to the upside, but now we have a little bit of weakness that's kicking in. Okay, but just like with some of the other markets that we just looked at, there's room for price to retrace, and then we have institutional areas of buying located just lower on the charts. So if we were to get a sell-off, that would be healthy. We would be looking forward to that, because then it would bring us new opportunities to engage in the market to the upside. Okay, on the weekly chart, we have a nice area of buying right here. So if price hangs out here for another week or two and then declines down to this area, that'll be a great spot to watch for momentum to shift to the upside. All right, just quickly look through some of the other. AMD, you see how we have similar situation. Demand was used to propel price higher. Okay, so that's good. That's good, but we're not seeing the continuation that we would normally be expecting at this point. So that's okay. Nice pullback wouldn't hurt. Amazon, same thing. On Amazon, on the weekly chart, we had an institutional area of supply located here, and we are watching for the removal of this area, which took place, but now we're watching for a continuation. But what I can tell you is that this obstacle that could have been used to propel price lower was not used to propel price lower. It came down here, reversed, and now it's removed that area. So it opens up the chart for a move higher. So I'm not seeing any signs here in the markets that any pullback is going to lead to a further decline. BlackRock, look where BlackRock is situated. Okay, do you see what's happening here? This is an institutional area of buying. Okay, price rallied up, came down to the institutional area buying, and now what are we seeing? A bullish candle being formed. All right, so we could see momentum start to build up like this. So any dropping of the markets could cause this to just sit here for a while, but then when the markets find support, we could see this rally up with some more strength. All right. What else we got here? Berkshire Hathaway, still at the highs. A lot of ranging on the weekly chart. Okay, which leads me to look at the 3-month chart, and I see consolidation taking place here. Now, is that consolidation going to lead to an eventual breakout, or is it going to decline? That's the question. When we look at the other markets, we can see that, again, a slight decline is okay, but then it's going to find some support, and then we should see, some more move to the upside. COSTCO is a stock that I really like. It's a really good one because COSTCO is, I mean, have you ever walked into a COSTCO and not seen it busy? I mean, COSTCO is crazy. Every time I go in there, it is busy. Busy like mad. So, I mean, there's no reason to suspect that this one's going to slow down. Okay? I do suspect that the momentum is going to continue to the upside. I'll be watching this area as things progress forward. That's the area on the weekly chart that I'll be paying attention to. But I like COSTCO a lot, and members know that I'm going to be looking at options on this one. We missed a really good trading opportunity here, And that option played out extremely well. Extremely well. In fact, let me just show you something here. Let me see. We'll skip that. But here was a great opportunity to buy. Price retraced to the area of demand and rallied. And what do we have? We have an ascending trend line here. Once that ascending trend line breaks, momentum will die down. So any options that were gotten into there to ride this momentum, when that trend line breaks, exit those options and wait for the next opportunity. Okay, let me see. Is there a okay. I'm going to load something up really quickly. Just give me 1 second. Okay, just loading up some software here. All right. I think the strike price we were looking at was 550s. Yeah, 550s. So let me show you something here. That was a clear textbook entry to get in long. All charts were trending to the upside. Price retraced to an area of institutional demand. So let's take a look at COSTCO. 350 strike price. And let's see, January. Let's see, COSTCO, did I say 350? 550, sorry. 550 call pro strike price right here. That's the one. That's the sucker that I was looking at. All right, so here we have the chart for the option, okay? And if you take a look at this here, this is where price was, right here. November 9 is when that retracement took place, okay? So if we go back to the chart, okay, this is where we're talking about, this area right here, when price retraced to that area of buying. We had this option at $5.50. Okay, $5.50. And over the span of how many days would we say? 2 weeks? Over the span of 2 weeks, the option has now rallied up to, what is that now? Oh, come on. 1750. Okay. So from 550 to 1750. Okay. Incredible. From $5 to $17.50. Incredible ride. Incredible ride. So, and again, this one, you know, we had a lot of momentum to the upside. Now we have the ascending trend line on the 4-hour chart. Right click on that, set an alert, crossing down once per bar close. Far trend line broken, exit long option. So when we get the alert on that, we'll take a look at the price. Maybe it comes down to 15, who knows? But if the momentum continues to the upside, you'd want to ride this sucker, okay? There's no reason to be exiting this sucker. From 550 to 750, that's a nice run, but this can continue going higher to 19 and 20 and 25 and so forth, okay? This was a nice call option. So let's see what the mRNA is doing. Bought at 212. It's at 725. Yeah, it's at 725 right now. The bid and ask spreads are pretty wide at this point. Still doing good though. Still doing good. Let's take a look at that one here. So we have a slight retracement, which is expected in price. Okay, we have that descending trend line that we've been looking at right here on the 4-hour time frame. So it's coming up now, slowly retracing. But this is a great entry point here because this is very low on the charts. Price has already made it up to 440. So we know that the forest has been cleared, right? You know what I'm talking about? All this here, when it's uncharted territory, a path has to be created through the uncharted territory. Once the path is created and price retraces to areas of demand, the move up is very clear. Okay? The move up is very clear to make it through. And we should see momentum start to build and then eventually move up like that. So any pushback or any pullback in the markets, what we're seeing is that there's going to be a lot of support just below price. So this can sit around here for a little bit until it eventually breaks through. But once that market gains strength, there's no reason for this not to continue higher. Okay, 350 strike prices up here, and then up there I would expect to see some kind of a move. But this area of supply is the area where there'll probably be significant profit taking on long positions before a continuation of price to the upside. So COSTCO is one of those that I'm watching very closely. I like it very much. It's one that's going to present a lot of buying opportunities. Okay, it has already presented buying opportunities and will continue in the future. It's a really good one. At Disney dropping, what have I been saying about Disney? Don't expect any upside on Disney. Why is that? Because we have downside here until institutional buying areas are located. So there's no institutional buying areas yet. So that's why we're seeing the weakness. Okay. And then the second you get a little bit of weakness in the markets, that thing will just drop. Okay. A little bit of weakness in the markets, and Disney just uses that weakness to drop. So again, you know, S&P, you see it dropping, right? But if it continues its drop, what is it going to come up against? Some support. And what do we have here? If this drops with the markets, what do we have? Support. Okay, looking for options, long options from that area is something that I'd be interested in doing. So another good trading opportunity. So Facebook, we had momentum shifting off the weekly area of buying here, and momentum is just slowly dying down. Okay, for this to really kick into gear, we need this area of supply to be taken out, and then it'll open up the charts for a bigger move. But likely we see momentum continue to the upside in time. Home Depot is another one that I like a lot. Home Depot is another one of those stores that you go into and it's busy. Okay, whenever somebody needs something for their home, this is where they go. And I really have not seen any type of store that provides the same type of services and products of this magnitude. I have not seen it anywhere. Okay, and look what happened back here early 2021. Price retraced to an area of buying and continued further. Okay, and now they've created a new area of buying here. So if price ever just sits up here and retraces to this area, I'd definitely be interested in some long options from that area. Great opportunity. Okay, so these are the ones I'm focusing on. Netflix. So what do we see with Netflix? Okay, so Netflix came down, fell short of hitting an institutional area of demand, and instead it was reacting to a trend line. If I'm not mistaken. We pull back this trend line back to here. You can see what was taking place here. Okay? And one thing that we know about the markets is, where do retail traders buy? Okay? Remember what retail traders are looking at. They're looking at support and resistance lines. They're looking at trend lines. I mean, this is not the most hidden trend line you could find. I mean, it's pretty obvious that this is a trend line here. So when price gets to these areas, you would expect some kind of a situation where retail traders are buying, and that's what was taking place here. Okay, and then you have the false breakout. Price comes out. It fails to really get any momentum to the upside here, and now look what's happening to this trend line. All right. So now this trend line is coming under attack, which means the daily chart and its structure is no longer going to support this chart. So what does that mean? That means we have to look at another time frame. And if we look at the weekly chart, we see we have an institutional area of buying here. Price came short of hitting that area, came back up. A little bit further down, we could start seeing momentum build to the upside from this area. And this is in line with what we're seeing with the S&P, Dow, and the Nasdaq. Okay, that taking a break, heading price downwards towards areas of buying, and then if the markets start to pick up, we'll likely see price start to pick up from here as well. So that one's looking pretty good as well. So Netflix, this one's on the side burner for now. NVDA, it's up there. It needs time to sit. It needs time to retrace. I'd feel more comfortable buying retracements than buying at the highs. Buying at the highs is not a good idea. State Street, not much going on here, but I am keeping an eye on it. Tesla, we saw the big drop in price. We had a chart signal to exit here. We spotted this one right before the break here for a move higher, which took place up to 1200s. Now we're getting price to come back. It's settling after hitting this area of buying here. Rallied up. It's removed this area of selling that was created by the banks, the institutions, the big players. And so it's now cleared room for price to continue higher. But I would wait at this point because, like I said, when we're looking at the markets, what are we seeing? We're seeing room for price to retrace. Okay, so this is not a time that I would want to be engaging in new long trades. Anything where we want price to rally up, I would not be engaging at this time. All right, this is a time to just sit back, watch, and wait to see what's going to happen. But this one will make a good long again, something to watch for. Walmart's not doing too much. We see that it's retraced to an area of buying here on the weekly chart, but there's no strong structures to be basing any momentum off of this chart. Okay, so we would need that to come into play before even getting excited about trading this chart. So that one's on the watch, but not watching it for anything anytime soon. VALE, this is one that was asked. I was asked by a member if I can examine this chart. So we'll take a look here. It's not the greatest. I mean, you know, all the other charts we were looking at, they've got clear upward trends at or near all-time highs. This is not one of those situations. Okay, so what I can tell you is that we are reacting to an institutional area of buying down here. Okay, you can see that buying coming in right now. Price dropped into the area, and now we're seeing the rally. But up here, we also have institutional selling. All right, so right now this chart is in a range, and one thing that we know to be true when price is in a range is that it can do just about anything. Momentum can be short-lived, die down, and then continue on. It can come all the way up to this area and then drop. So there's going to be a lot of questions about how price is going to play out from this area. All right. If we had to estimate what are the chances that price is going to get stronger rather than weaker, based on where price is reacting to right now, we'd say there's a 70% chance that price will get stronger over time. Okay, because of where we're situated. But overall, this is not, this is not a good enough number to take any type of trades off of. I'd want clear momentum, clear direction, and I would want to know that the markets are also supporting a rally. And as we saw, the markets are not supporting that at this time. It's supporting the fact that there's likely going to be some kind of a pullback. Okay, but watch this area and see if it holds, because it will likely hold, but for how long is the question. Zoom is not doing well. The reason why it's not doing well is because, everybody's getting back to work. So the need for this company's services are not very strong. So we can see this big drop in price, all right? It just removed an institutional area of buying, which tells me that this chart is now clear, just like Disney, for a move even lower. Okay, so you can bet that there's going to be a lot of call option or put options on this one. So Zoom, let's take a look here. So you go to Zoom, ZM, right here. Oh, come on. Zoom. Video conferencing. Okay. Stock. All right. So look at the put volume, okay? Look at the put volume. 5,000. You take a look at the call options, right? Below 2,000. No doubt, people are going to be taking advantage of this weakness in Zoom, okay? The fact that most people are going back to work and they're not using the software as much. So a lot of the paid services, they're closing down their accounts, and just not a lot of support or the need for the software is not as great as what it was before. Okay, so you can see that now. So obviously put options are going to be the thing that people are going to want. And like I said, there's a clear sign that it could drop down to the 173. So probably 150 puts. January, December 17, yeah, probably 150 puts. Let's put that in there. 150. Volume 304. The 170 puts are where the volume is right now. 170 puts. Yeah, that's a decent one. 170 puts right here. Okay. Look at that. Look at that volume just in the last 8 hours, from 50 cents to 250. Okay. From 50 cents to 250. No reason why this can't go even higher. So over the next few days, with this weakness that we're seeing here, price can go down to 180s easily, so that's another 20 bucks decline. What's the spread? 240 to 265. Yeah, this can go to $5, double at least, from what I'm seeing. So people day trading options, this is what they would be looking at. And using the advantage that we have, understanding what time frames are being broken, what structures are being broken, and what we have to focus on. This is broken. This is broken. They're all broken. Okay? So now we start looking at downtrends. When you have structures that are all broken to the upside, we start focusing on downtrends. Okay, so we look at the daily chart, and we do that. This is a downtrend here. Loss of supply located here. Now, will price get back up there? Probably not. You know, it all depends. Likely not. It looks like a lot of momentum to the downside here. Okay, the next buying area is here that would be focused on. So that's the 180 area. Okay, the 180 area. And we have institutional supply formed here. All right. But this momentum to the downside is very strong. And why is it strong? Well, this goes back to what we've talked about numerous times, right? So when you have large areas of institutional buying being taken out, once it gets taken out, it's like a dam breaking through, right? You got a dam holding the waters, and the momentum keeps on building and building and building, and the water just keeps on coming and coming, and it's like spilling over the top edge. Eventually, when that dam breaks, that's it. It's straight down, okay? And we got weakness in the markets. So that's helping to fuel this fear and fuel this move to the downside. So bid ask 255, 280, yeah, makes sense. It'll sit there and then slowly start to climb upwards. 170 put. That's pretty much the. We also got 2008 option volume here. Open interest, sorry, volume is here. 1016. It's the largest out of all of them, except for 200 puts. 200 strike price. So that's at the money right now. The 200s. $11. Let's take a look at that one. At the money. So this gives you the option, and this one expires December 17th, so we're talking about just under a month. Yeah, that's a decent time frame for this move, because it shouldn't take much to get down there. So at the money, call option, or sorry, put option, strike price 200, okay? That gives people the option to sell this stock at $200. So if this drops to 180 and you have the option to sell this at $200, you know, it's either traders who own the shares of this and they're trying to protect against losses and they don't want to sell their shares, buying these puts, okay, which gives them the option to sell it at a higher price rather than losing money at a lower price. And that one's doing quite well today. Look at that. From lows of, what do we have there? Just under $5 to now $11 in one day. Not bad. Double your money if you got in there early. You'd have to get in there early. Yes, the low was 380. The high is 1140. So day trading options, yeah, if you know what you're doing, you can do extremely well. But you gotta know what you're doing. So this one's working out well. Let's take a look. We were looking at Disney, right, dropping as well. So Disney dropping to 130s. Okay, Disney dropping to 130. So we go over to our watch list. We type in Disney. Walt Disney stock. So, and we look at the time frame that this is happening on, right? So look, one whole month, and that's how far we got down on the monthly chart. So you can safely suspect that it's going to take, you know, it's going to take maybe 2 months. We'd want to look at options around the 2-month So December would be a little bit close, too close for my liking, because that's only giving me a month. But we're looking at 160 strike. Volume is pretty low. 152.50 is where the volume's at. And that's pretty much at the money right now. So let's look at something like January. And what did we say this would likely be dropping to? 130s. Okay, so let's look at the 130. Open interest 12,000. Wow, there's already a lot of people in that. Okay. 12,116. So 130, this was for January. There we go. Okay. It's you can get it for $1 now. $1. Okay. And if this continues to drop as we suspect it will be, I mean, there's nothing to stop this. Be interesting to see where this goes. Be interesting to see where this goes. So let's put in an order here to buy, and let's put 10, and we're going to put it at, the ask is 102. Do it for the day, buy 10. All right. Let's see. The order size of 10 exceeds the size limit of 5. Let me see. Why is that? What's the issue here? What am I missing here? What was the strike? 130. Limit 102 day submit. The order size of 10 exceeds the limit of 5. Oh, why do they have a limit there? Okay, so it would cost $1,000. Transmit. We'll put that order in there, see if it gets triggered, and then we'll track this. We'll track it and see how it performs. But this one looks like a good one to me. And we got the time. We got until January, so we got a couple months for this to play out. But again, I don't need the couple months. I just want this weakness to continue. And I'll be watching when it hits this weekly area of demand, because we could see a reaction from there as well. Right here, we could see some kind of a reaction like that. It might be short-lived, it might just rip through it and then continue lower. Depends, but if price drops there and the markets drop as well, like from what we were watching at the beginning of this session, if the markets hit demand and this hits demand here and I see some strong momentum, I'll be watching this chart here, the 4-hour. I'll be watching this chart. Right now we've got this situation here, which is not the greatest. I'd prefer a much more steeper trend line. So what I will be keeping track of is the institutional areas of selling on this chart. And once an institutional area of selling gets taken out, then I'll exit that position. And whatever profit there is, I'll take it. So we'll see if it gets triggered. The order's still in there. 99.102 and limit 102. So it should get triggered anytime soon. So Facebook, yeah, we went through all those. Tesla, Zoom. Look at that. It just continues to drop. No doubt about that. AKA uptick rule has been triggered, and the related exchanges have implemented a short sale restriction in accordance with their policies. Short selling is still permitted when the SEC Rule 201 criteria are met. Short sale restrictions is in effect from November 23rd to November 24th. Too much momentum to the downside. And what was that option again? We were looking at 170s. Yeah, right here. 265, 290. Yeah, I'd like to keep an eye on that one. Okay. Okay. Yeah, so that one's looking quite weak. Bank of America, watching this one. This one should play out quite nicely. We've got institutional area of selling here. So obviously that needs to be removed before we can see stronger move to the upside. So could see some move to the downside as well once that area of supply gets hit. And again, this could be in line with what we're seeing in the markets, that potential drop until institutional demand gets contacted. So we could see price react to the downside from there. Wouldn't be surprised. So I'll continue to watch that. Goldman Sachs, got this one on the list. HSBC, all the big banks that trade the currency markets. This one hasn't been doing too well. HSBC. Wonder what has been causing that weakness. JP Morgan looks very similar to Bank of America. This one looks like it's retraced to an area of buying here. And then we see the bullish pressure coming in. So we'll see if that holds. What else we got here? BioNTech. Notice this one dropped down into an institutional area buying. Okay, pretty clear. Pretty darn clear. Coming into buying and then taking off. So this one, when it came into the buying area, the second test, first test here, then we have this trend line here, like this. Right here, like that. And now it's slightly retracing. So the momentum is shifting here to the upside, which is what we'd like to see. Institutional buying coming into play, momentum shifting on the lower time frame charts. So this one, 330 strike price would have been a good one. BNTX. So what was it I said? 330 strike price. And January, 330 strike price call options. $330 right here, this one here. The size is very small. Not much there, but let's take a look at the performance. 330 call option. So ever since price contacted, which was September 27, I don't know if this one goes back that far. September 27th. September 27th. Right. Around $20. Okay, so volatility was high when it first came into that area of buying. This is something that we've talked about before, and this is what makes the strategy that we use incredibly powerful. It gives us a massive edge when trading options. Okay, because when price comes first into an area of demand, there's going to be high volatility because that drop is usually quite significant. All right, so you can see that drop quite significant, which makes the premiums expensive. But once price shifts momentum, okay, now we're looking at November 18. Oops. I remove this trend line. November 18. So, November 18, price was at $13. Okay? November 18, price was at $13. So you can see when that momentum was in, okay, we had all sorts of situations. We had September 27, price was at 20, and then momentum started to slow down, so your premiums came down below $10. Then it spiked up with a little bit of that shift in momentum, right? That's the institutions coming in with buying. It went almost as high as $30, around the $27.50 mark, okay? And then it died down again. And then once that momentum shifts, okay, that November 18 area, once that the lower time frame chart shifts that momentum, we have the beginning of the big rush. All right, so we have the options selling for about $13. That's your trigger. That's the entry point. Momentum shifting on the lower time frame after institutional demand comes into play, that's your entry point. All right, $13. Then it shoots up to the upside as high as, what was it, $34.70. Okay, the double, triple, double your investment or triple your investment. You get in at 13, doubles 26, right? So you made almost double your money right there, just with that single move off this area here, just this initial move here. Okay, and now what could be setting up is, you know, we see the markets and they have room for a drop, and if this was to drop, look what's right there. Okay, very likely something like that would take place. So that was another good opportunity, buying off institutional demand, taking advantage of that momentum. Could have doubled your profits, doubled your money, almost triple your money, or double your money, I should say. Okay, your investment at 13,000. 35 minus 13, 22,000. Okay, or $22 per contract. So Disney's been filled. Good. So we'll track that one. Now I've added it to the list so I can track it. Be interesting to see how that plays out now going forward. Okay, so you get the point. Very powerful stuff. Very, very powerful stuff. Now it's at 25, no problem, right? You got it in at 13. You could put a stop loss on this sucker too. Put a stop loss at 14 or 15. Say, you know what? I'm just going to sit and wait this out because I see where the market's at. I see that there's room for this to continue upwards. But I don't want to take a loss on it, so I'll put a stop loss just above my my entry. And worst case scenario, I get out and then reevaluate and get in at another time. But there's no reason to be getting out at this point. Johnson & Johnson pushing back. Okay, the break of momentum was triggered here, right up here, which now opens up the floodgates for a push down to 144. Okay, it could do that, especially with the markets getting weaker. That could happen. You know, we look at the daily chart. There's nothing to support anything on the daily chart. There's nothing to support any movement to the upside here, here, or here. Okay? Which leaves the only option, this one here. unless structures start to get built on these lower time frames. So this could easily drop. So I'd like to look at the news and see what it is that they're putting out there in regards to Johnson & Johnson. What's their explanation for this? And try to determine what the overall consensus is and why it's doing what it's doing. Zoom is dropping for a good reason. I mean, it makes complete sense, right? Everybody's going back to work. Nobody's using the services anymore, so they're not making as much money, and everybody understands that. So why do people want to own Zoom? Pfizer just made new highs, wasn't able to close up there, so I'll be keeping my eye on this one. Bitcoin ETF sucks for those that got in at 27, right? It's at 22 now. Nice decrease in price. What did I mention? What did I say about this ETF? Be careful with it, because now they're going to be using this to manipulate price, just like with the futures contract. Okay, they will use this to manipulate Bitcoin's price. Nancy Pelosi stock. Crowd is dropping. Now it's just removed an institutional area of buying on the weekly chart. Okay, this opens up for a move lower now. And then market supports. This comes in, shifts momentum, starts going to the upside. So I'd like to look into this more and find out why she bought this. What is with this company, CrowdStrike Holdings? I'd like to find out more about it. Google retracing. It looks like it's going to break through this area here, right? So it's pretty much in line with what we're seeing with the other markets as well. Breakthrough, drop, drop. We have institutional buying down here. Might find support there and continue upwards. Watch for momentum. Call options once momentum shifts from down here to the upside. And then ride the momentum until the trend on the 4-hour chart breaks, and then exit. Simple. So keep that one on the side burner there. Microsoft retracing. Okay, so we're seeing it all around. Okay, we're seeing it all around. The retracements. PayPal. This one's doing terribly. I wonder what the news is on PayPal. What's going on with PayPal? Is PayPal a buy under 200? No, it's not. Is PayPal a buy under 200? No, it's not. There's been no shift in momentum at all in PayPal. So why would you want to be buying it? It's an institutional demand, but we have not yet seen any buying taking place yet. So stay away from that. But insider buy, PayPal holdings, okay. RBLX. Now it's retracing. Where is it retracing to? Areas of demand. Okay, so we could see price retrace this area of demand, build momentum, shift momentum to the upside. Call options would be ideal if that momentum shift takes place. Okay, so that is what I am watching. So there could be some nice trading opportunities. There's already some that are in play. We got this Disney one now added to the portfolio, which I'd like to continue watching to see how it plays out. And just keep an eye on that one. The BioNTech. Yeah, I'd like to watch this as well. That momentum really kicked in. It could start to slow down now because of the pressure to the downside from the markets, but long term, I don't see any reason why this isn't going to continue to the upside. Okay, all the things are in play. Monthly demand, weekly demand. It's looking good. All right, so I'll save that. If you want, we'll take a look at the other markets, currency market, gold, so forth. Let's see what's going on there. So gold is retracing downwards. over the latest Araujo report that I did. I told you that we are seeing strong signs here that the institutions are going to start selling their long positions. So we can open up that, take a look at that. So here's what we are looking at. I won't go into much detail like I have for members, but we'll briefly take a look at what we're seeing here. So you can see over the last few weeks, the institutions have been increasing their long positions quite dramatically. Now we got positions at 360,000, all right? Look how aggressive that is. That's extremely aggressive. When you look at the coloration of the cell, it's very red, which means it's very aggressive, all right? We look at the coloration of shorts, it's not as aggressive, all right? When we look at the total size, we're at 461. The maximum size they've ever reached with total positions is 463, all right? What we know to be true about the markets is that when the institutions reach areas where they are maxing out on their positions, one of them has to give, all right? So it's logically more likely going to be long positions that are going to have to give, all right? So if they start closing off these long positions, guess what's going to happen with price? It's going to decline. Now remember, the weekly chart is ranging, which makes it very difficult to determine what is going to happen with price. Price can fall short of hitting areas and then continue lower. It can rally, fall short of hitting areas and then continue the rally. There's a lot of things that can happen within ranging. But within ranging, we also have to take into consideration what the banks are doing with their positions. So I cannot help but focus on what's happening here, because you saw what happened with the Aussie. Okay, months ago, I pointed out that the Aussie, they had very aggressive short positions and that they were going to have to take profits on those short positions. And when you take profits on short positions, it causes price to rally. That's what we saw happen in the markets, that rally. Okay, so with this, I'm watching for a push lower. And I can't but help see the fact that this institutional area of buying, they use the area, right? If we go over to the chart here, November 2020, okay, November 2020, so that goes a little bit further back than here. But overall, if we take a look at the positions here on the long side, okay, this is what's been happening while price was contacting an institutional area of buying. They took long positions from 269 to 360. All right, that's very bullish, but within the context of price being in a range. So very bullish, but where are they going with price? They're not really going anywhere with price. Okay. Now at the same time, we look at short positions during the same time. And what's the end result? We have the 88,000s, and now we're at 100,000. So they've been just stabilizing shorts. They increase it, they decrease it, they increase it, they decrease it. It looks like they're using it more to help facilitate the long trades that they were getting into. But now that we're reaching near max size and price has not broken out of this range, that's very concerning. If I was betting on gold going higher past the 2000s, I'd be very concerned with what I'm seeing here, because this is not evidence to suggest to me that price is going to go higher. So I'm not seeing that here. If anything, if I have to take everything I know to be true about the markets, I see a zone, an area of buying from the banks that has been contacted multiple times. And within all these contacts, they've accumulated long positions, but they have not broken the momentum to the upside and not broken through the ranging on the weekly chart. This does not lead me to suspect that price is going to go higher. Okay? What it leads me to suspect is that once they start taking massive profits on long positions, this sucker can easily drop. Easily drop. Okay? Like that. So that is what I'm watching for. I'm watching for signs of that. And the sure tell sign that this is going to happen is when that area of demand gets broken through. Okay? But that's what I am watching for in terms of gold. Oil. So oil has dropped into an institutional area of demand, and now we see the bullishness come in. What a surprise. Okay, let's take a look at something. The CL contract on oil for January. Let's see here. January, yeah. Okay, let's look at the options here. And let's say 80 call options would be good. 80 call options. Look at the volume here. At open interest 12,000, volume 3.26, 80 call. You see how it's spiking up? Yeah, well, that's because we got the institutional area of buying here coming into play. Okay, look at what these call options we're going for. $1, 99 cents. Okay, and what did it reach a high of today? $2.11. Double your money. Double your money. Just from reacting off of institutional demand. That's it. In one trade. Okay? It took 2 days for that. Double your money in 2 days. Alright? So, and this can continue higher. This can continue higher. The drop was quite significant, so the volatility was higher. Right? So this is the implied volatility here. Price dropped. The volatility is up there. Okay, look how high, 73, 75 cents. Volatility is high. It was low on November 16. November 16 was low. Okay. In November 16, it was just coming down towards hitting that area of demand. So the volatility is high at this point. It'll slow down as price starts to shift momentum, which it's doing now. It'll start to lower. The volatility will come down, and the premium will get cheaper. But this one's looking pretty good as well. Okay, it's looking pretty good. Look at the call options, the volume on the call options. 350 strike price. Sorry, not 350 straight. That's something different there. BNTX. Why hasn't that switched over? That should have switched over. It's still on BNTX. CL call 80. Come on. Oh, didn't switch over. Gotta look into why that. Oh yeah, the volume, this implied volatility was for BNTX too. It wasn't switching over to. Interesting. Got to figure that out. But the volatility is going to be high right now because of that drop. Okay, we wait until momentum shifts because that's what's going to happen. Momentum shifts, right? It slows down. And then eventually will start to make its way up. But this is another one that I'd be watching. Okay. For long positions. So oil's looking good. Drop down into institutional area buying. No reason to suspect that we're not going to see more strength on this chart. And strength on this would suggest that the CAD is going to get stronger. So we could see that, right? Especially with the dollar inside supply right now. It leads us to suspect that that's a possibility. So I'd be watching for that. Let's take a look. So the oil, when we look here, look at short positions. You know, would you like to be long oil when you see short positions drop from 160,000 to 94,000? Would you like to be in long? Yeah, that's comforting. As price declines, they're removing their short positions, okay? Taking some profits on longs. Why taking profits at longs? Well, because they're at highs, right? Take profits if fuels a move to the downside. Close some shorts in preparation for a move up. Yeah, it's likely. That's what everything is screaming. You know, you can never know 100% what is going to happen, but you can know with high degree of certainty that something is going to happen. And that's all it takes to make money in this market. Just know something with a high degree of certainty. Not think something is going to happen because it's hitting a Bollinger Band. That doesn't make sense. We have to be intelligent when we do our analysis. You have to base it on reality. You have to base it on the fact that you know the institutions are removing a massive amount of their short positions. You know that they're retracing price into a weekly area of buying within a weekly uptrend. You have to know those things. There's other things on this chart that we talk about in level 3 that I won't get into that are supporting this as well. They're bullish, and there's no reason to suspect that price is not going to go up. And then we just wait for the signals on the lower time frames, and when they're there, the odds of price heading up increases incredibly. Okay, so that is looking good. I don't see any reason why it won't continue. Dollar, look at the long positions, right? What have I been saying? Since contract expirations, what have they been doing? Just adding long, adding long, adding long, right? And what about short positions? Cooled off. Are they focused on shorts right now? No, they're not. Okay. So what does price do? It rallies. We're not very surprised by that, okay? We had the trade signal down here to go long. Right here. Trade signal to go long. All right. It wasn't a very strong structure, but the structure was there. They used it to facilitate the move higher. And so that is what is happening. Aussie, same thing I was telling you about earlier. Okay. They were aggressively short, reaching all-time max size. So what did they have to do? They had to close shorts, which fueled the move to the upside. So this move to the upside was not being fueled by buying. And I was mentioning this, beware. They're not buying here. This is not the reason why price is rallying, okay? So they've since declined. And look at long positions since contract expirations. Cooled off. Are they focusing on long positions? No, they are not. Not at all. They focused on taking profits on short positions. And they could start accumulating shorts right now. They could start accumulating shorts and push price down aggressively. There's no reason to suspect that this is not going to happen in time. There's no reason to suspect that. From what I'm seeing, there's a lot of evidence to suggest that this price is going to move down. Now, we would need this area to be removed first to really know that the momentum's there for the drop. But I'm just telling you what I'm seeing now so that you understand the reasons why I'm seeing what I'm seeing. Doesn't the Aussie usually track somewhat alongside gold? What did we just say with gold? Right? So is that not in line with what we're seeing here? So these are pieces of evidence that I'm looking at that lead me to suspect that these moves are going to happen. And once I know what the context is of price and what is likely going to happen, now my eyes are focused on what they need to be focused on. Are there any trade signals, short trade signals that I should be aware of? Is there any areas that the banks are creating major selling that I could take advantage of this information to take advantage of the move that I suspect is going to happen, which is to the downside? Now, can we know 100% that this is going to happen? No. But I'd say I'm about 60% sure at this point that price is going to drop. Okay. When this area of demand gets taken out, I'll be 75% sure that price is going to drop. when there's a downward trend and supply, and then price comes up to supply, and then momentum starts to shift to the downside, I'm going to be 85% sure that price is going to drop. Okay? I can never say 100% because there'll always be some kind of factors that come into play that could shift the dynamic of what's happening on the charts, but 85% is pretty high. USCAD. So again, we're seeing some push to the upside. We had short trade signal with two targets. One got hit. Then we got the signal to exit when we saw momentum shifting to the upside on the lower time frame charts. And now we're seeing that with the dollar strength, we saw a push to the upside. But we're also seeing some supply coming into play on the dollar, which could be short-lived. It could be short-lived until the continuation to the upside. Okay? But right now, when we look at positions, we're not seeing much here. Longs are cooled off. Shorts are a little bit more aggressive. They just came out of nowhere. But look at this here. This is not really, you know, the type of sentiment that I would like to deal with, right? Look over the last couple months. We have neutral, we have bullish, now neutral, and then bearish. There's nothing strong here. So when I see this, when I see that there's no strong sentiment, I tend to want to back away, all right? If it's in the right context, then it could mean that momentum is just about to shift in the opposite direction, but this is not the same context as those that I would be excited about if I saw this type of dynamic shift, okay? So I wouldn't be interested in trading this pair at this point. Okay, oops, let's clear that. US Swiss, we saw that push to the upside, which we were talking about, to head back up into the area of weekly supply, targets at 95.66. Once that weekly area of supply gets taken out, very likely that that target will be hit. Then we have the euro, a drop in price. We had a signal higher to get in short. I had a bunch of short positions, which I closed off at my target, which got hit. And this chart is not suggesting that there's any institutional buying that is being contacted. Okay, so move to the upside could be short-lived. Overall, we do expect that price will continue to the downside. Okay, and the crazy thing is that when you look at what our traders are doing, they are short. Sorry, long. When you look at what retail traders are doing, they're very long. Okay, which just again goes to prove what we always talk about, how retail traders are always on the opposite end of what the institutions are doing. Institutions are shorting this. They're pushing price down. They made it pretty clear, right? We got the signal that this sucker was going to drop right here. Okay, on the weekly chart. That was the signal. That was a while ago. And retail traders are getting along. I don't know what it is that retail traders are looking at that would make them think that price is going to drop. I have no clue. I can't understand that. But they were looking at something. They were reading something, reading news. I don't know what it is that they were looking at. But they're definitely losing money. And they're thinking, oh, price has dropped quite significantly. It's been, you know, it's just reached its limits. It's got to pull back. Okay? It's got to pull back now. It's got to rally up because this drop has just been too significant and there's got to be some kind of a push to the upside. No, that's not true. No, there doesn't have to be. Okay? When you put things in the proper context, it doesn't have to go up. Right? When you look here, you see this drop? How many people thought it was going to go up? Right? It didn't. It sits sideways and then goes lower. How many people thought it was going to go up? It didn't. It sits sideways and it goes lower. How many people think it's going to go up? It didn't. It keeps lower. Why would it keep lower? Well, do you see any institutional area of buying here? No. Where's institutional buying here located? 109. That's where the last area was located where the institutions were interested in buying the euro. Yes, it happened years ago, but this is how the market works. Doesn't matter how long ago it took place. These areas are significant areas where the banks will look to do the same thing that they did in the past. Okay, depending on what dynamic is in play on the charts, it could play out significantly different than how it has played out in the past. But that is why you need to understand the multiple time frame analysis that we do and the sequences that play out. You need to understand what's to be expected when price gets to these areas. And that's how you can position yourselves accordingly. But being in long is not what you want right now. That is the opposite of what you want. But most traders in long. It's ridiculous, and so they're going to lose. And I feel for them. It's sad, and that's just how it is. So, and anybody looking at the COT reports, it would have a very difficult time understanding what is taking place here. That's why you have to put it into the proper context. So when we look at the positions of the euro, 198 long, 202. So they're slightly more short. Whoop-de-doo. Look at that, 50-50. Okay? 50-50 right now. But you have to put it in the context, the proper context. Okay? They used to be extremely long. Okay? They closed off those positions and then started to get aggressive with shorts. That's the proper context. Yes, it's 50-50, but it's 50-50 because we used to be so extremely long. That's why it's 50-50. So to become bearish, there's a point where bullishness has to turn to neutral before it gets to bearishness, right? And in that process, that is bearishness. A lot of people don't understand that. But that beginning shift, that is the bearishness. But if you were just looking at this data back in August, saying, oh, you know, long positions are 233 and short positions are 175, you think, oh, they're long. Yeah, they used to be long. Okay? They used to be long. They're not anymore. So you're looking at that, you're not putting it in the proper context. Remember when we were there? And I was like, be careful, total size is aggressive. Longs are getting very aggressive. They're going to have to start taking some profits on that. When they take profits, it's going to fuel a move to the downside. Yeah. So that's why I mentioned those things, to put it into proper context. Pound aggressive. Look how aggressive over the last 4 weeks with short positions. From 36 cooled off to 82. All of a sudden they're so interested in shorts. Yeah, well, I told you it would follow what the euro is doing. And I also have been mentioning that there's nothing to stop price from dropping into this area of demand here. Okay. Hit the like button if you guys haven't. If you're enjoying this session and the information that I am sharing with you, I'd appreciate it if you could hit the like button. We got a bunch of you in here. It'd be nice to get it up to 30, at least 30 likes for today. You guys enjoying the session today? Is it informative? Is it helping you? Does it help with your trading decisions? Does it help with you understanding how the market works and what we should be focused on when we're looking at the markets? Is it giving you some insight in the Sherlock analysis process that we do and the reason why we call it the Sherlock analysis process? The Sherlock trading system. If you've read any of the Sherlock stories, or if you watched any of the Sherlock shows that used to air back in the day, every once in a while they come up with Sherlock movies. And Sherlock was, or was it called Holmes? What was that show that was really popular? With that Cumberbatch guy. That was a great show. Did you guys see that? Every episode is like an hour and a half. So good. Yeah, because, you know, Sherlock, he's an investigator, and he works, you know, alongside other investigators. There's so many investigators in the world, right? But what makes Sherlock different from every other investigator? Why is it that he can come into a scene and he spots the evidence that nobody else spots? Why is it that he can look at the evidence and come to conclusions that nobody else can come to? There's knowledge that he has, and there's skills and abilities that he has that surpasses the average inspector or detective, okay? That's why we call it the Sherlock system, because the Sherlock system contains knowledge about the markets that nobody else has. Plain and simple. Okay, it's a big statement, but it's true, and anybody who's a student with us and a member knows that to be true. And so we have a unique ability to use a system that has been put together over many years of collecting data from the markets, studying the COT report, studying the positions from the institutions has been the biggest thing. Okay, understanding how they move, understanding in what context they are moving their positions, and how it relates to the supply and demand on the charts. Then when you take in the multiple time frame analysis and the sequencing that we do, it's just, there's nothing more accurate than it. There's nothing more accurate than it. And like, I just did a podcast yesterday, and when I get the link for it, I'll share it with you guys and gals. But in the podcast, I was talking about how, if you're studying Bollinger Bands and support and resistance and all that stuff, okay, fine. You can make it work. Some people make it work. There's nothing wrong with that. There isn't just one way to trade. I get it. But what I'm saying is that, you can go through life knowing how to interpret information so that you actually see the truth of it, or you can go through life interpreting things in the wrong way. Does it mean you're not going to have a successful life? No, not necessarily. You could have a successful life. There's a lot of people that have successful lives that are not able to interpret data in the correct way, but they still live a successful life. But the chances of you having a successful life increase dramatically when you have knowledge and skills and abilities that surpass everybody else. And one of those skills is the ability to take in knowledge, take in information, take in data, and process that information to give you a conclusion that will be very much in line with reality, okay? And in trading, this is what we have to do. We have to analyze the markets, gather evidence, and come to some kind of a conclusion. What's the conclusion? The conclusion is, this is what's likely going to happen. Then you have to take a look at that situation that's going to happen and say, all right, so logically, is there going to be a trading opportunity for me? And you have to assess all the risks involved. And if there are too many risks, you can't go forward. But if the risks are small and you're able to get into a position because all the formations are there and the system says, listen, you've collected all the evidence. I'm telling you, by looking at the charts, there's a trade signal here. If everything is in line with reality, if the banks are taking profits or they're accumulating a position or reversing their position when price enters an institutional area of buying, these are the things that help support the trade signals that we get off the charts. If the two are in line with each other, guess what? Your odds of that trade working increase dramatically, okay? And so if you've been with us a long time or just started to be with us, make sure you subscribe to this channel because we're going to continue to show you the results of the analysis that we do and how we put the pieces of the puzzle together to figure out what is likely going to happen, okay? Don't ever trust anybody in what they say. That's the number one rule in life. Never trust what anybody tells you, period. If you go by that, you'll do extremely well. So how do you know anything? You collect information. You process it in your own head. You take what you know to be true through your own study, through your own reading, through your own work, and come out with a conclusion. And that's what you believe. Don't trust me and what I'm saying, okay? You don't know me, all right? Many of you do because you've been around long enough to see that what we do is consistent, and I support it by showing you the results. I tell you things before they take place, not afterwards, okay? I put myself out there like a lot of people would never do, okay? I put myself out there because if I do make a mistake, we can examine it and determine what it was that we were looking at that caused the mistake. And we learn from it. We're not going to be perfect, but if we're more accurate than everybody else, that makes us profitable, okay? And I believe we are more accurate than anybody else. Like I said, we're not going to be perfect because I'm a human being, and there's going to be days where I'm not going to be seeing things the way that I'm supposed to be seeing, but we learn from it. We're not going to shame each other from it, and there's a lot of people out there like that, and I don't understand why they waste their breath like that. There's no need to be shaming anybody, okay? There's no need to be doing any of that. We're a community. We support each other. We're all here for the same reasons. We're all here to make money from this market, to stop being manipulated by the big banks, and to stop losing money to these big corporations. All right, we're here to take some of that money back, to empower ourselves to be able to trade these markets in a successful way. And the way we do that is through supporting each other and being there for one another and learning, and never stop learning. Always working forward, always collecting information, making mistakes and learning from it and pushing forward. And this is what we're all about. Okay? So US dollar, Japanese yen, we saw what happened here. Okay, price rallied up, took out that weekly area of supply, which opens up the move for a bigger push to the upside. This is looking pretty good for a continued move. Okay, this is what helps to support that the dollar is going to continue getting stronger and that the euro is going to drop. This is really supportive of that. All right, we haven't had anything very strong yet in terms of new areas of demand coming in. Monthly chart is looking very good for a push upwards. Very, very good. Right? This is signaling that it's going to go up. Weekly chart is signaling that it's going to go up. Daily chart is signaling that's going to go up. I'm waiting a little bit longer for the actual signal to be present, but so far everything is looking pretty good. Okay? And when we take a look at this, what do we see? Okay? We're looking for evidence to suggest that price is going to go higher. What do we see since contracts expired? Okay? Contracts came up, they expired, and what was the bank's main focus? Buying. Look at short positions. Okay? The coloration of the cells are blue. What does that tell us? Okay? It's neutral. They don't care about short positions right now. They're not focused on shorts. They're focusing on longs. And they rallied price up into an area of supply, institutional supply, and then what took place? Some profit taking, reducing long positions from 138 to 117 now. Does that mean that it's going to start dropping? No, it doesn't mean that. That means they're just taking profits on long positions after this massive rally. Okay? So once they're there, they're going to take profits on those positions, and then eventually, you know, they'll push price even higher. All right? So let's take a look once again at what the average trader is doing with their positions. Average trader is short. Okay? All right? Are we surprised that the average trader is short? No, we're not surprised. Why? Because once again, the banks have fooled these traders into getting into the opposite position. Okay? It's just sad that this continually happens. There was no reason to suspect that price was going to drop. We had upward trends being created on the dollar. We had long trade signals on the dollar. If you have long trade signals on the dollar, who in their right mind would ever want to be getting in short? Well, if you don't know what to look for, you don't have critical thinking, you don't have the skills to think on your own, you don't have the skills to collect data and process that data to come out with a conclusion that is in line with reality, then guess what happens? You short. Was that decision to short in line with reality? No, it wasn't. Reality was price was going up. So is that process of collecting information and coming to a conclusion, is it flawed? I would say so. And what is their process? What is the process that your average trader used to make the decision that they want to get in short? I bet it had to do with looking at the news. I bet it had to do with listening to experts. Okay? Looking at the fundamental reasons why the Japanese yen should start getting stronger. Whatever it was, it's probably a mixture of those plus a handful of other ones. Regardless, somebody offered them information, and instead of collecting that information and examining that information and comparing it to what they know to be true, they just said, okay. All right? Unless what they know to be true is incorrect. Which just tells you what I'm trying to show you here. Okay? If you're looking at Bollinger Bands, support and resistance, moving averages, okay, looking at RSI, RSI, oh, it's overbought. Yeah, I'm sure it is. Because when price rallied up so strongly, RSI was up, right? Overbought. So signal to short, in some circumstances, it would mean that it is time to short. But in the context of price downtrending, if the dollar was downtrending and we had short trade signals and price rallied up into some major area of supply within that context and RSI was high, then in that context, yes, that would be a good sign that price is going to drop. But how would your average trader know how to differentiate between the two situations? They wouldn't know. So you see the flaw in this way of trading? It's heavily flawed. So you understand now why most traders are like, well, we're just playing the odds. Some trades will work, some trades will not. Yeah, but if you don't understand the context, most of your trades are not going to win. Because it's like sticking your hand in a jar of gumballs, okay? And 10% of them are green, and the rest of them are different colors. And every time you put your hand in the gumball jar and you close your eyes, you got to randomly grab the green one. What are the chances that you're going to grab the green one? Very slim, right? So, I mean, that's the problem. And if you trade that way for 10 years, what are you going to learn after 10 years? That RSI works sometimes and sometimes it doesn't. Are you going to really understand the context of when it works and when it doesn't? Not really. Because if you're not understanding the reality of what's going on, excuse me, you're never going to build up a knowledge base of true facts, things that you can count on. And that's what we need to do. You need to build up a knowledge base of real information about the markets. If you don't have that, you won't be successful. Right? It's just how it is. And you can apply the same thinking and reasoning to actual life, real life. And if you study philosophy, like I've always said, you'll come to realize that this is what they were talking about back in the day. You don't trust, you build your own knowledge base of what you know to be true. Through studying, through thinking, through being logical, through applying critical thinking, you'll come to the answers. The second you say, I don't know how to do that, and listen, I know it's a skill that you have to learn because you weren't taught it in school, okay? That's why they gave you a textbook. They said, read this, remember it, and then we're going to give you a test to see if you remember everything. That's not teaching people how to learn. That's not teaching people how to think for themselves. That's teaching people how to remember stuff, okay? This is the facts you need to remember. Don't question it. And let's see if you remember it. That's all that is. So these are new skills that you're going to have to learn. The great thing is when you are a member with us, not only are you going to learn how to trade, you're going to learn how to think on your own. Okay? And the more your brain practices thinking on its own, the more it's going to start thinking on its own. And then, one day you're not even going to be trading. You're going to be done trading. You're going to be done journaling. You're going to be sitting in front of the TV. You're going to be flipping through the stations. You're going to turn on the news. And the guy's going to come or the girl's going to come and they're going to say something. And instead of just believing it, you're going to stop and ponder it and say, why would they say that? What are they trying to get me to believe? What do they want me to believe? Why do they want me to believe that? Has their message been consistent over the years? Because the truth is consistent. Okay, you can look at historical charts going back 20 years and the same truth can be extracted. What took place 20 years ago, 15 years ago, 10 years ago, 5 years ago is the same thing happening now. Okay, that's why we can study historical charts, and this is what we do in our classroom sessions. That's why we can study historical charts, and the information that we extract from those charts can be applied to what we're doing now. Because the truth is the truth. It doesn't change. It's always there. All right? So you'll be sitting in front of the TV. Is it consistent? Is what they're saying consistent? No, it's not. Interesting. Interesting. And then one day you'll be watching the news and you'll be listening to the experts talk about why the markets are moving the way they are. And you're like, wait a minute. The market is in the same context as what it was a year ago. But a year ago you said this is the reason why the market was moving the way it was. And this time you're saying it's a different reason. You know, when you pay attention to these data releases and you hear them explain why the market is moving the way that it is, you'll be surprised, okay? You'll be shocked, just like my members are, and those who have been following me long enough. Whenever I release the information, whenever I point to the discrepancies in what they say and their explanations for what price is doing, it's hardly ever in line with reality, okay? It's hardly ever in line with reality. And so that's why most traders are short this pair. Because it's not in line with reality. What they're being told is not in line with reality. But it just so well fits into the narrative that needs to play out so that the banks can take advantage. Okay? How do you think they're taking profits on long positions right now? Okay? How do you think they're taking profits on long positions? So, how do you think price got all the way up there? Who had to sell to them for them to buy? Right? So there you go. If it didn't work that way, how would they make money? So you understand, when you understand the bigger picture, you start to see very clearly how this all comes together. Kiwi, a little bit of weakness. There's nothing really, significant here except for the fact that we have some supply that's in play. And over the longer period of time, we suspect that price will probably decline. But the odds of that, it's just like, the Aussie, right? Price is in the middle of the ocean, low odds, 60% chance it's going to drop. As obstacles start to get removed, those odds start to increase. Okay, so that's pretty much it with in terms of the currency pairs. If you guys have any questions, I will answer them. Otherwise, that's it. It's a long session, an hour and a half. I hope you got something out of it. I think this was a great session. A lot was covered, and let's take a quick look, quick look at what that Disney is doing. Oh, it's already up, $68. Boom. Not bad, right? And it'll continue to go, as we know, okay? By looking at the charts. We did the analysis, and if we did it correctly, there's no reason why this shouldn't continue to increase in value. All right? So there you go. This is how you collect information. This is how you process things. This is how you build your knowledge, build your awareness of what's going on. And then as you see the power of this process, your confidence will grow. And as your confidence grows, your thinking will change. And as your thinking will change, you'll start believing you can constantly and consistently make money. There's no reason why you can't, because now you've empowered yourself with everything you have, everything you need to be successful. And you will truly feel it in your gut that you have done the right thing to be successful. When you truly feel that you've done the right thing, that's when you see success. You can pretend and say, oh, I'm successful, I'm going to make it. You can wake up with daily affirmations and all that stuff, but it's not going to work, okay? Because if you know for a fact you haven't truly done what you need to do to be successful, you're not going to be successful, okay? And to truly know that you've done the right thing, you have to feel it deep in your soul. And when you do the right thing, that's based in reality, that's based in truth, you will feel it deep in your soul. You do anything else, you're not going to feel it. You're going to be empty. Okay. So that's it. So enjoy the rest of your day. Thank you for joining me. As always, long session. Thank you for sticking around. Hit the like button if you haven't. And if you want to subscribe, please do so. And I'll share a lot more information as we progress through this journey of trading together. All right. Thanks, everybody. Enjoy the rest of your day. We'll talk to you later.